participants to join us before we start the webinar. Thank you very much for your patience. Welcome, everyone. Welcome our esteemed speakers and participants to this webinar. Today, we'll be discussing a unique set of avenues for small and medium-sized organizations to overcome the challenges of the pandemic and raise long-term capital from various sources, particularly the capital market. Today's webinar is themed Capital Raising for Pandemics, for SMEs in the Pandemic. My name is Olutobi Onoji. I work for the Nigerian Stock Exchange, and I will be your moderator for today's webinar. We're excited that you could make it in time to join despite your very busy schedule. Before I introduce our speakers and get into the agenda, I would like to cover a few housekeeping topics. Okay, so it's important for us to keep our microphones muted throughout the session, except if you are invited to make a contribution. We invite active participation in this session, particularly, especially at the chat room on your screen or through the Q&A section, to the Q&A box at the time for Q&A. If you have any questions at any point, remember to type into the Q&A session, which is the preferred platform for questions. Today's session promises to be a truly engaging session. The welcome address will be delivered by Mr. Olumide Bolumole, the divisional head for Listeners Business at the Nigerian Stock Exchange. His welcome remarks will be followed by the president of Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture, Nasima Hajia Saratu Dia Aliyu. After that, we'll hear from Mr. Olanrewaju Odufuwa, team lead for primary markets at the Nigerian Stock Exchange. His presentation will be focused on the value proposition of the NSE board, which is a dedicated platform for fast growth companies such as SMEs operating in various sectors, including technology companies, to raise funds in the capital market. And then we would also have the opportunity to ask questions from Mr. Lanre Odufuwa before we proceed into a panel session, which will focus on assessing finance and business growth in Nigeria. The panel, of course, will feature business leaders and subject matter experts, and we look forward to your participation via Q&A box. Thank you once again for joining us with the webinar. I will now turn over to Mr. Bolumole for his opening remarks. Mr. Bolumole, the floor is yours, sir.
Thank you so much, Toby, for your opening comments. If I may just sort of establish some protocols. To the National President, the Nigeria Association of Chambers of Commerce, Industry, Mines and Agriculture, Nasima Hajia Saratu Iya Aliyu. I believe the past president of Coalition of Northern States Chambers of Commerce, Industry, Mines and Agriculture, Consima Alhaji Jinjiri Abubakar, and other panelists present and distinguished ladies and gentlemen, good morning. On behalf of the National Council and management of the Nigerian Stock Exchange, I welcome you all to this webinar on capital raising for SMEs through the Stock Exchange. This is in furtherance of our commitment to educating business promoters on the alternative funding opportunities available in the capital market to catalyze business growth. We are pleased to host this event in collaboration with various trade groups, chambers of commerce in the northern region of the country, and it's our hope that this webinar will be of immense value to you all. The traditional role of the exchange as a platform for capital formation and liquidity holds good promise for businesses, as access to capital is a key challenge faced by companies active in various sectors of the economy. Small and medium-sized enterprises, SMEs, are businesses that maintain revenues, assets, or a number of employees below a certain threshold, and several studies have indicated that they play an important role in any economy. Typically outnumbering large firms considerably, SMEs collectively employ vast numbers of people and serve as the engine for job creation, most especially in a developing economy such as ours. According to the National Bureau of Statistics, SMEs in Nigeria have contributed about 48% of the national GDP in the last 5 years. With a total number of about 41.5 million enterprises and the northern region being home to 19 million SMEs, this segment also accounts for 96% of operational businesses and 84% of employment. Furthermore, SMEs play other crucial roles in the stability of national economies by enabling countries to better cope with the shocks of economic cycles through the diversification of business activities across a broad base of SMEs. Despite these significant contributions, the reality and headwinds faced by SME operators are quite daunting. The economic landscape in recent years has proven quite challenging, with infrastructure and other burdens experienced by larger corporates have seemingly been amplified within this segment. These companies have seen declining productivity rates caused by deficiencies in power supply, substandard trade facilitation infrastructure, lack of right-sized and right-priced financing, multiplicity of taxes, levies, and fees, as well as the limited availability of requisite talent. This is further compounded with an absence of needed corporate governance to ensure maximized capacity utilization and profitability for these companies. In 2020, the COVID-19 pandemic and resultant lockdown also led to a significant reduction in major sources of revenue across key economic sectors. Prior to the pandemic, the Finance Act signed into law in January last year increased value-added tax from 5% to 7.5% in a bid to increase and diversify government revenues after the decline in crude oil prices. This, coupled with the Naira devaluation, also impacted negatively on businesses in industries unable to reflect such in product and service repricing. In view of the challenges experienced by SMEs, there is a need for these companies to scale, allowing them to better navigate the business environment, thus requiring medium to long-term capital. A common outcome of research studies and discussions on SMEs indicates that, despite their economic importance, SMEs struggle to gain access to adequate financing to enable them grow and truly realize their potential. The Nigerian Stock Exchange has products and services to support capital raising by various categories of corporates. For instance, despite the impact of COVID-19, the NSE has functioned to facilitate needed financing with over 2.5 trillion in capital raised by governments and corporates in 2020 across various asset classes. In terms of market performance, of the 93 global equity indices tracked by Bloomberg, the NSE All-Share Index emerged the best performing index in the world, surpassing the S&P 500, the Dow Jones Industrial Index, and other market indices to post a one-year return of 50.03%. This webinar has been put together to educate participants on the alternative funding opportunities available in the capital market through the NSE. The exchange in January 2020 launched the NSE Growth Board, designed to support companies in their growth phase, and this notably caters to SMEs. Our support for the growth and development of small businesses in Nigeria stems from our recognition of SMEs as critical agents of economic development and transformation in our nation. I welcome all our key stakeholders participating in the webinar and hope that learnings from today's discourse will further spur the growth of SMEs along with increased capital sourced through the platform of the Nigerian Stock Exchange. I thank you all for listening, and I wish us all fruitful deliberations. Thank you. I believe, Haji, I believe it's your...
Thank you very much, Mr. Bolumole. Thank you for opening the...
I've not been called upon, so I can just start reading.
Great.
Yeah? So, can I start?
Haji, I would like to welcome you to make your opening remarks.
Thank you.
Please welcome Hajia Saratu, Chambers of Commerce, Industry, Mines and Agriculture, NASIMA, for your opening remarks. Thank you very much, ma'am.
Thank you very much, Mr. Moderator. Distinguished ladies and gentlemen, I want to stand on existing protocol. On behalf of the Executive Council and members of the Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture, NASIMA, I commend the National Council and management of the Nigerian Stock Exchange for organizing this webinar on capital raising for small and medium enterprises through the stock exchange. I also thank the organizers for extending this invitation to me to give the keynote address to this event, as it reflects a recognition of the role played by the Chamber of Commerce and in promoting the growth and competitiveness of private enterprise in Nigeria. Truly, the significance of small and medium enterprises, SMEs, for the growth, productivity, and competitiveness of the economies of developing countries is universally recognized. SMEs employ the largest percentage of the labor force, provide an average or avenue, to harness entrepreneurial capacities, technical skills, and innovations. However, it has been our experience in the Chamber of Commerce that SMEs face a wide range of challenges that negatively impact their ability to fulfill this potential. The challenges often includes financial mismanagement, poor record keeping, the poor state of infrastructure in the economy, multiplicity of taxes and levies, limited access to markets, and poor access to finance. In the post-COVID-19 reality, these challenges have taken up an even more worrisome form. Thus, there is the need to focus on non-traditional solutions to problems that have continued to impact SMEs. Events such as this, which focus on the issues of access to finance, are crucial to promoting private sector fed solutions. Solutions like the Nigerian Stock Exchange Growth Board, which promises to raise long-term capital and promote liquidity for SMEs while encouraging good cooperation or corporate governance practices. It is my sincere hope that this initiative will complement other available funding mechanisms of MSMEs, such that businesses will remain afloat to support economic progress and linkage with bigger companies. Going forward, I am hopeful that today's initiative by the Nigerian Stock Exchange will spur greater interest in the activities of the Growth Board by the private sector, as the Growth Board is a conscious effort to give credence to SMEs, which are the building blocks of the Nigerian economy. In turn, as more companies seek exchange listing, the country would be able to reduce the size of the informal sector, currently estimated at over $40 trillion, and draw more people out of poverty. To this end, please accept my assurance as the national president of NASIMA of our willingness to work with market operators to promote transactions and interest in the growth board. In conclusion, I note and commend the participation of other private sector stakeholders here present today, the executives and members of the Coalition of Northern States Chambers of Commerce, the OPS, Chambers of Commerce, Consumer, other trade groups, and members of the organized private sector, OPS. I look forward to further collaboration with the Nigerian Stock Exchange in the interest of the national economy, and assure you of our commitment to projects such as this that promote the growth and competitiveness of Nigerian businesses. I thank you all for listening. And I'm sorry for all the small errors, so many interruptions here. Thank you for listening to me, and God bless you.
For your opening remarks, very insightful remarks indeed. It was good to hear straight from your mouth that issues such as financial mismanagement, poor record keeping, limited access to market, and poor access to finance are key issues that small, medium enterprises face. And then also to hear that the pandemic, this issue has been exacerbated by the pandemic. We look forward to hearing from Mr. Larry Odufua, who will tell us of the value proposition of the Growth Board, which is specifically designed to address these challenges that you've highlighted, the challenges of financial mismanagement, poor record keeping, limited access to finance, and limited access to market and poor access to finance for SMEs. Without further ado, I will hand over to Mr. Larry Odufua, team lead primary markets in the Nigerian Stock Exchange, to make his presentation of the NSE board proposition. Larry, the floor.
Good morning, everyone.
The floor is yours.
Yes, thank you, Toby. Can you hear me well?
Yes, I can. Very well, thank you.
Okay. Good morning, everyone. It is my pleasure to be here to share with you about the Growth Board value proposition. As stated, my name is Olarenwaju Odufua, primary market. And this morning, talking to you about the Growth Board value proposition and why we believe it's of immense benefits to SMEs and businesses like yours. I trust everyone can see my slide. My outline is brief. I'll take you through why we actually created the Growth Board, the fundamentals of the market that came to support the reason why the Growth Board should be. I will delve into what the Growth Board is and some of the benefits we've put in place for both investors and issuers alike, and also tell you some of the other support services that the Growth Board has in place, particularly the value-added services that are designed to help companies in their journey through listing. So why did we create the Growth Board? We all know from the figures we get from the Nigerian Bureau of Statistics that Nigeria has probably the largest SME sector in Africa. with currently close to 42 million SMEs across the various sectors of the economy. That is very large. And we know very well that the SME is possibly the largest contributor to GDP. We currently contribute about 48% to the GDP of Nigeria. Despite all these numbers and looking at the potential of the SME, we know that SMEs are facing a lot of threats to their existence in Nigeria. Some of the key threats that we have identified and we think are very critical to SMEs. Some keenly access to finance is probably the most keenly faced issue among SMEs. There's a level of insecurity that has risen up over the last few days. There are concerns regarding government policies, the ease of doing business, issues of multiple taxations, there are infrastructural gaps, and of course, the FX volatility also leaves much to be concerned. When we zero in down, focusing on access to finance, which is why we're here, we begin to see a mismatch in terms of the kind of funding that is available to SMEs operating in Nigeria. From a report we obtained from the Oxford Economics, you come to realize that most of the funding opportunities that are available for SMEs tend to lie within the short-term type of funding. So we see a lot of SMEs targeting bank loans, overdrafts and credit lines, etc., trade credit, to support their businesses, whereas other alternative forms of funding that actually supports long-term business growth, strategic expansion, such as debt and equity, continue to have a minute representation among SMEs. This, for me, speaks a lot into what the Growth Board wants to solve. We need to begin to change the kind of funding that's available to SMEs for them to realize that actually raising more capital in the capital market would actually support their strategic aspirations and expansions. A brief look at what we see in other jurisdictions, just benchmarking against our key markets. We see that Nigeria is pretty much lagging behind in terms of good companies that have actually accessed the capital market. Indeed, we only have about nine SME companies out of the 42 million companies I've already mentioned that are currently listed on the Nigerian Stock Exchange, and that just represents less than 7 billion in terms of market cap. And when you compare that to the current size of the market, the SME market, the Nigerian capital market, which is about 22 trillion on the equity side, you see that there's a lot of opportunity for group companies to begin to see the Nigerian capital market as their primary source in raising their capital for the business. Speaking to how SME funding typically works, and this is very important in our development of what the Growth Board intends to do. We looked at the journey of the typical SME from what you typically know, from where we call the ideation stage, where you as a founder comes up with a brilliant idea and you go about setting a company to achieve such potential growth. Along the way, there's a huge need for capital, and typically what your first point of contact before the business is actually formalized is to engage both family and friends, or even family and friends and other co-founders to invest in the business. Over time, and this is where a lot of SMEs don't make it, those that actually begin to show some level of growth, begin to show some level of attraction to typical investment company, private equity companies and venture capitalists, who begin to see these companies as showing impressive growth returns, and they decide to inject capital to support the growth of the business. So typically what you see on this stage, and Nigeria is becoming a very keen market or attractive market for a lot of overseas joint venture companies. We've seen a lot of fintechs access VC funding and PE funding over the last few years. Nigeria in 2019, just before the pandemic, was the leading destination for private capital. I think about 30% of the fund, about $600 million that came into Africa, came into Nigeria. So that's typically how PE firms look at the Nigerian market, and over time, those companies that show that growth potential and ability to expand rapidly usually get various forms of investment across various rounds. Somewhere along the line, we all know that the way PE firms and VC firms work, they eventually do have to exit those investments, and so at a point in time, they look at opportunities to divest from those companies, or even the founders, for example, tend to want to either remove some of their sweat capital, or they want to take the business beyond Nigeria, for example, and maybe have a regional or global play. And that's when listing become a very for SMEs. We've seen a number of companies in the last few years who have followed this trajectory, that have gone from ideation, raising PE, VC money. A very good example we know is IntoSwitch, and we've seen those kind of companies go and eventually come into the capital market to support their regional and Pan-African strategy. So what is the Growth Board? Just to add a bit of what everyone has said, it is our initiative in the NSC to elevate the Nigerian capital market. And we believe that supporting businesses across their various life cycle from inception to maturity is good for the Nigerian capital market. The Growth Board, as I said, is designed for fast-growing companies that operate in various sectors of the economy. And we do have a preference for technology companies, because we know that for companies that enable technology, they usually show rapid growth potential. The Growth Board is designed to encourage companies who are beginning to imbibe the good corporate governance, putting in place structures and operational processes to support business growth. It is also designed to encourage companies with high growth potential looking to raise long-term capital that is needed to support the right kind of strategic expansions for their business. A few objectives of the Growth Board: long-term capital is to cater for various market segments, and is also to provide a platform for operators who are looking to access a potential pipeline of companies into list. A few of the benefits we've identified for the Growth Board. For issuers like you, the Growth Board will be of immense value because it does provide a basis of valuing your company, allows you to potentially enhance liquidity by accessing new investors. It also gives you an opportunity for you to have a diversified, sort of broaden your investor base than getting a typical PE firm or one single coin investor into your business. And we know the nuances of what those challenges might be. It also serves as an exit option. We've seen that some core investors, after growing their business, might want to exit their sweat capital, look into other things, or actually expand across the boundaries of Nigeria. So it does provide exit option for core investors to exit easily. More importantly, it provides a platform to access cheap and long-term capital, be it equities or fixed income. The Growth Board provides global visibility. The Nigerian Stock Exchange is home to both international and local investors, and listing on the Growth Board allows you to tap into global recognition, global visibility of improving your global profile. It also provides a mechanism for increasing your corporate governance and supporting sustainability objectives. For investors, a lot of our investors like to key into, we begin to see a lot of investors trying to key into good companies, and this gives them the means by which they can do that to earn high return and capital gains and minimizing risk. It allows investors to participate in new startups and companies within the growth sector. And it also provides a diversified investment option for both retail and institutional investors. So in terms of eligibility of the Growth Board, one of the key things we tried to address with the Growth Board was to promote more flexibility for issuers to come and list on the Nigerian Stock Exchange. Typically what you see for a lot of companies that have tried over the years to come to list on the exchange is, the requirements are so strenuous for my kind of business. So what we've designed, two special segments. We have two segments for the board, the entry and the standard segment. And we've designed multiple routes to ensure that there is enough flexibility to address where you are in your business and ease of entry. So speaking about the entry segment, we have two routes. For companies that who are trying to list on the Growth Board, it's important they are a publicly limited liability. It's important they also have at least a minimum of 2 years of operations. They have their audited financials in IFRS standards. And of course, because we are looking at fast growth companies, companies that show a minimum growth rate of 2% cumulative in the last 2 years is also a requirement. That being said, we do understand that there are some companies that show high potential growth, but they are not 2 years old. They're new startups. Their financials are not in order. So we created another route which allows them to, to list on the Growth Board if they can provide evidence of investment by either a core investor or a strong technical partner who must have at least 2 years operating track record, or a majority shareholder who is either a high network individual or a director of one of our listed companies. And on the entry segment, the general requirement beyond those two routes, the market capitalization for the entry is about 50 million to about 500 million. So if you're a startup and your market capitalization is between that benchmark, the entry segment is for you. All the boards require a designated advisor. You also require what we call a minimum number of 25 shareholders, as well as directors need to retain a minimum 50% of their shares for a period of 12 months from the date of listing. When we look at the standard segment, similar to just the entry segment, being a PLC, 2 years operations, revenue growth, also similar. But in terms, the key difference lies in the market capitalization. We require a market cap of the company to be above 500 million and above. The minimum shareholders is 51 as against 25 for the entry segment. And so those are the two key differentials. And of course, if in terms of you're unable to meet the route one, the core investor must have 4 years of operating track record. Prior to now, we actually had the ASM board, and I know that my divisional head had mentioned that. And so one of the things we want to show is why the ASM board, what the group offers and is much different for the ASM board. In terms of most of the differences lies within the market. We have put in place a market cap. We've actually also put a focus on the kind of companies we want to look out for. We've also reviewed our fee structure, as well as improved our value-added services proposition to support companies willing to list. Some of the improved benefits, going from the other side, we have increased our approval turnaround time to market. So you could actually list on the Growth Board in rather short period of time as against what was in the past. We've improved our VAS, which I'll talk to in the next slide. We've also increased our numbers of designated advisors and reviewed our fee structure. VAS, value-added services. So what are VAS? Because I keep mentioning VAS. These are what we call key elements of our business development and retention efforts. VAS are somewhat designed to help give listed companies that edge to be a listed company, and also to easily facilitate new listings. Some of the benefits of our value-added services partners, VAS are required to help issuers with pre-listing diagnostics at reduced fee structures. VAS are intended to stimulate investor interest in our market, as well as help a lot of listed companies struggle with post-listing obligations so that they can retain their listing status. Under our VAS framework, we have 5 pillars. The first is analyst coverage. And basically what analyst coverage are, these are firms, research firms or investment firms who help provide sell-side coverage on our listed companies with the whole aim of increasing the visibility of companies so that they can generate interest in their shares. Second is the investor relations. Investor relation partner help companies to build a world-class IR service. I mean, it basically is important for prospective issuers to be able to tell their stories effectively. IR companies help companies to do that as well. 3, institutional services. Basically, these are professional service firms who help companies build the right business structures, put in place documentation processes to ensure that they can operate as world-class organizations. Corporate access helps with information. It allows issuers to be able to monitor investor interest movement in their shares. And of course, corporate governance, the NSE promotes the highest level of corporate governance. And so corporate governance under the VAS helps setting corporate governance structures of companies to ensure that they retain their listing status and meet post-listing obligations. These are a few of the VAS partners we have on board. These are reputable players in their own right across the various professional sphere, all across the 5 pillars. In terms of designated advisors, we have a whole lot of designated financial advisors supporting the Growth Board. A call to any of these designated advisors would help start your journey towards being a listed company. And they understand the nuances regarding being an SME. So concerns regarding they won't know how to talk to me or engage me, we've dealt that quite well. A quick update on where we are on the Growth Board. The Growth Board was launched January last year. So far, we've actually migrated 4 companies. 4 companies were eligible for migration to the Growth Board for the ASM board. Those 4 are Chelarans PLC, the Initiate Living Trust Mortgage Bank, as well as McNichols. The Growth Board Index has also been created, and that you can also see on our market information. Just for comparison, just looking at where we are as the NSE. So right now we have three boards: the main board, the premium board, Growth Board. I won't go into them for the interest of time. And this is also, in terms, I spoke earlier about we have significantly reduced our timelines to listing. These are the approved timelines for the various types of capital raise that you might want to undertake. Typically, which is the common ones, the initial public offer listing by introduction takes just about 17 days. And that is a great improvement from our 90-day turnaround time in the past. In closing, we've strengthened our approval authority for all transactions, which speaks to turnaround time. If you look at our listing fee for the growth board, the entry segment, the initial listing fees is about 250,000 naira, and the annual listing fee is 200,000. We have put in place, the Council of NSE has graciously put in place a 50% discount on the listing application fee, and for a period of 24 months, and that commenced January last year. So I would implore all of you to start getting your applications ready so that we can use this year for you to enjoy that discount. Thank you. Thank you. I'll now hand over to Toby.
Thank you very much, Lanre, for that very detailed presentation on the growth board. There's so much to learn, so many opportunities that the NSE presents to SMEs and fast growth companies. The opportunities are quite extensive, and it's good to hear from you about these opportunities. I would take two questions from Abimbola Alawode, if you would indulge us. The first question is, what industry does the entrance in the growth board typically come from, and what is their age on average?
Oh, okay, so I should take it one at a time. All right.
Yes.
So typically, we have, I mean, the group board is open to all companies, SMEs. I mean, SMEs are spread across all sectors. Why I mentioned technology companies, there is one of the eligibility criteria is revenue growth as against profitability. That is a metric on the other on the other board. But because we understand businesses are still in their early stage, profitability, money is being churned back into the business, we decided to put a revenue hurdle. That being said, we know in this day and age, technology is an enabler of businesses. And so most businesses that are technology enabled seem to fall into our key catchment area. But that being said, we still have a lot of other companies across various sectors. A lot of discussions with pipeline prospects, from what I've seen, cuts across all the sectors of the economy. In terms of age, typically, the group board was designed for companies, even from startups. So we have, the requirement allows for companies less than 6 months old to come into the group board, all the way to as mature as they can be. But typically we'll look at between 0 to 5. That being said, more established companies can still come on the group board if for the point that the group board offers what we call age and light reporting, understanding that there are smaller businesses in terms of age, and they're not used to the level of corporate governance that is required.
Okay, thank you very much, Larry. It appears you already addressed another question by your response. Another question that was asked was, why can't the NSE allow many SMEs to list and give them a few years, maybe 3 years to comply? But I think your response already addressed that.
Yes. So, like I said, because of that concern regarding, the NSC, the eligibility criteria for listing are very difficult, perceived actually. I don't think my business is at this stage to meet some of these listing requirements. The group board was designed for the kind of, we put in place the eligibility criteria that meets the age and size of the company. So I don't want to use the word that it's light requirements, because that's not what I'm trying to portray or state, but it is more that the kind of reporting that fits a business at where it is. So if some of the requirements in terms of reporting. If you look at the main board, you typically have about 8 or 9 reports that need to be complied with yearly. The growth board has significantly reduced that amount to about 4 or 5.
Okay, thank you, Larry. One more question, please. So I have a question from an anonymous attendee who says, most people in the North, especially the Northeast, are not very aware of the opportunities that the growth board presents. What can the NSC do about it?
I would probably say that we are trying to do a lot, and I think it's not just the North that there is awareness. There are deliberate attempts to ensure we engage issuers across the various branches of the NSC. The NSC operates across all the key regions of Nigeria. We are also planning to do the growth board. Do some road shows to help create more awareness for the growth board in the coming months, and that road show will occur in the North, in the East, and in the South as well. There are also deliberate efforts to begin to create more visibility on the growth board across designated financial advisors, issuing houses, as well as the press and media.
Thank you very much, Larry. We've run out of time for questions for Larry. So without further ado, we will go straight to the panel session. Ladies and gentlemen, we will proceed to the panel discussion now. Please welcome Professor Uche Uwaleke, Professor of Capital Markets, Nasarawa State University, who is the moderator for the panel session. He will introduce the panelists and moderate the session. Professor, the floor is yours.
Thank you very much. Good morning, everyone. I hope I'm audible enough.
Yes, we can hear you very clearly, Professor.
Okay. Yeah, so it's my pleasure to be here. As you have been told, I am Uche Uwaleke. I teach at the Nasarawa State University, Kefi, a professor of capital market, and I'm also the president of the Capital Market Academics of Nigeria. Let me stand, as they say, on the already established protocol. With me on this panel to look at the issue of the day are 4 distinguished gentlemen. I have Mr. Nathan Kelechi Nwokoro. Mr. Nathan Kelechi Nwokoro is of the Carry Assets Limited. There is also Alhaji Ali Madugu, the MD CEO of Dala Foods Limited. Alhaji Jinjiri Abubakar is the president of Coalition of Northern States Chambers of Commerce, Industry, Mines and Agriculture. And last and not the least is Dr. Ahmed Rabiu, who is a former president of Kano Chamber of Commerce and the immediate past Honorable Commissioner for Commerce. Gentlemen, you are all welcome. Now we have listened to the president of NASIMA, and we've also just listened to Larry make presentations on the contending issue, the burning issue, which is access to finance. And if you listen to the 2 presentations, one thing that stood out is the fact that access to finance remains the major challenge that SMEs face. If you were to rank the challenges that were mentioned, I'm sure access to finance, is key. And this is what we know from studies that we already have. SMEs in this country grapple with the challenge of access to finance. So we are going to be discussing this. Essentially, the focus of our discussion will be on the opportunities that are available, extending what Larry presented, available in the stock exchange, the challenges that SMEs face with respect to assessing this finance through the stock exchange, or even getting to be listed, and of course, ways to overcome these challenges. We shall also be looking at expectations by SMEs on the part of the regulators, especially the stock exchange. What should the stock exchange be doing to ease access of SMEs to finance? So I start with you, Nathan, Carry Assets. Nathan, you are a consultant and you are an advisor. You have, I'm sure, assisted a number of SMEs in raising finance. So in 2 minutes, I would like you to give your general thoughts on the issue of access to finance. And in giving these general thoughts, also touch on the critical factors that SMEs consider when they are seeking to access finance across all the markets.
Okay.
Nathan?
Yeah, thank you very much, Prof. And welcome to all participants today. For me and for us at Cowrie Asset, the issue of finance for SMEs is one that we think should not exist in the first place in a country like Nigeria, given the size of funding that is available for businesses that operate within Nigeria. When Lanre made his presentation, he did mention the attractiveness of startups in Nigeria, particularly tech companies and fintech companies, the ability to attract funding even from outside the shores of Nigeria. So funding shouldn't be a problem for SMEs in Nigeria. And I'm sure that as we go along in this discussion, we are going to see what the real issues are, why it seems difficult for SMEs to raise funds to, beef up their working capital and give our economy the sort of growth that we deserve. The president of NASIMA during her presentation did mention the contribution of the SME to the broad economy. Almost 50% of our GDP comes from the SME sector. And this sector employs over 90%. So the SME is a very important sector in our economy. And I can tell you, if we get our acts right with the SMEs, we are not going to see the sort of GDP growth that we've seen in the past couple of years.
Yeah, Nathan, yes. Nathan, that point has been made, by previous speakers. My question is, what sort of things do SMEs typically consider, in seeking finance?
Okay. So to your question, the primary consideration for SMEs are two. Are you going to raise funds through debt offering or through equity offering? Debt offering simply means that you are going to borrow money from investors, either from the capital market or from the bank. And that will require the company, the SME, to make periodic interest payments, either monthly or semi-annually, as in the case of the capital market. Now, if you are raising money through equity offering, the requirement for periodic interest payment will not exist. However, as the company makes profits, the company will give back to the shareholders from the profits that the company generates. But the key difference here is that the company will not require to make periodic interest payments. And then, so for the company, how do you decide which of this route to go? How do you decide whether you raise funds through debt offering or through equity offering? First of all, you think about the stability of your cash flow. If you're a business with unstable cash flow, then it may serve you better to raise money through by giving up some of your shares, bring in more shareholders, and redistribute your profit with them as you make profit. However, for companies that have stable cash flow, companies in manufacturing, retail sector, food and beverages that have shown stable cash flow over the years, those companies might be better served raising money through debt offering. Now, for tech companies.
Thank you very much, Nathan.
Okay.
Nathan, thank you. Thank you very much. Yes, I will come back. Nathan, thank you. I will come back to you.
All right.
But before I come back to you, let me go to Alhaji Ali. Alhaji Ali, you're the MD of Dala Foods. And
yes,
I understand, yes, and I understand you are considering raising long-term funds.
Yes.
Long-term funds, of course, come to the capital market. So can you share with us some of your reasons for choosing that option? Just as Nathan said, option of either debt or equity. What are some of your reasons for choosing that long-term, the option of the capital market?
Thank you, Prof. Good morning to all. Dala Food is an averagely old company. We are 41 years old now. I am the second generation manager of the company. Since between 2005, we started planning to raise money from the capital market as capital to expand our business. We are into food processing and packaging. And what really gave us the interest of going to the stock exchange was that from 1979, when the company was established, day in, day out, we are using bank loans and overdrafts from bank to augment our working capital. And if I can lightly say, we are a little bit used to that, and we happen to be always on our toes because of the environment we are operating in Nigeria, the uncertainties, the other challenges that are there in business in Nigeria. So we feel that by having an equity, generating money through equity to invest in expanding our factory, and it could serve us a little bit better because of the long-term gestation of manufacturing industry in Nigeria.
Yeah, thank you very much, Alhaji Ali. It's good to know that your company is approaching the capital market for long-term funds, because as you rightly pointed out, bank finance is not what drives growth. For an economy to grow and develop, what is required is actually long-term capital. And for businesses that, if you look at the product life cycle, for example, in all the stages of the product life cycle, long-term capital, medium to long-term capital is actually what is required to ensure that the business gets to at least the point of stability. So that point is noted. And I also want to link it to the question I want to ask Dr. Ahmed. Dr. Ahmed Rabiu, the former president of Kano Chamber of Commerce and a former commissioner. Dr. Rabiu, think that now, do you think that a number of business promoters have an understanding of the opportunities that are available in the stock exchange? Alhaji Ali just mentioned now that his company is about assessing capital through the stock exchange. Do you think that a sizable number of promoters, business promoters, understand these? What are the gaps
Thank you very much, Prof. First, I appreciate the presentation on the growth board, and to say also what Alhaji Ali has mentioned. I'm aware he has been working on that when the second-tier securities market was first introduced by the Nigeria Stock Exchange. He was working on it, and I remember we did compare notes a number of times. Level of awareness is definitely very shallow. Only very few entrepreneurs know of the opportunities. The Nigeria Stock Exchange has opened trading floors and had embarked at some time on sensitizing and educating the investing public. Regrettably, that has not happened at the scale that it could yield good results. And for the few persons who have taken their own interest because of their own background, their own capacity, like he mentioned, he's a second-generation manager of the company he's running, so he has had an opportunity to grow and acquire certain capacities. He is able to approach the market, but he did, and still could not have headway because of the nature of the rules and the processes. I'm happy that I have seen the outline of the approval timelines, and we are hopeful that this will be keen into His Excellency the Vice President, Professor Yemi Oshibanjo's GCON executive or presidential order that he signed while he was acting president, that once you make your applications, whether the process has been completed or not, once the required timeline has been, threshold has been attained, you would be deemed to have been given such approval. In any case, we need the Nigerian Stock Exchange to do a lot more workshops and clinics across the country, and particularly focus on the relevant sectors to capture all those, because they have statistics of those. Luckily now, from the FRIS and from other channels, there are information that the Nigerian Stock Exchange can get and be able to invite the persons and even visit them in their factories and say, we have seen what you are doing, and we must assist you to access the market. I think this bit I can say in terms of the awareness. The awareness line is very low. The exchange needs to be need to do a lot of clinics and workshops to educate and facilitate.
Okay, thank you very much, Doctor. Now, talking about the awareness and the challenges that SMEs, really face, I come back to Nathan. Nathan, you've been dealing with them as a consultant. Okay, what would you say are the challenges that these SMEs face with respect to listing, getting to list on the stock exchange? Yes, we have heard from Larry. We've also had some comments by the president of
Okay.
From your experience, what are the listings on the part of?
Yeah, your network. Network looks
Nathan, can you hear me? Okay, but can you hear me now?
Yeah, I can hear you now.
Okay, go ahead. I was talking about the challenges SMEs face with respect to listing, and how some of those challenges can be overcome.
Okay, I think first of all, the summary of the challenges SMEs face, from my experience, is leaving it too late to get ready. A lot of SMEs are closely held initially. Most of them are run like family businesses, and some even lack clarity as to what they're actually trying to do, what their real focus is in their sector. So you have to understand how professional investors think. Before professional investors will invest in your business, they want to see clarity. They want to see that you have the right kind of structure that protects their investment. So for companies that desire to list, the best advice is for them to start operating well ahead of time as to international standards. Have the right kind of corporate governance, the best standard of corporate governance, have strong internal control, comply with the International Financial Reporting Standard, keep your record keeping very clean, and then of course your make a good pitch to investors. If you have these things already in place before approaching the market, listing becomes a walkover. It becomes a matter of time. The timelines can be met. But if the company is not ready, if you have not complied with IFRS tax, your tax compliance is not up to date, your record keeping is not proper, your reporting structure is, because as a listed company, you have a duty to investors. You must send in your report periodically. So you must test these structures ahead of time, that you have the internal capability to do all of this before getting to the market. Because if you don't have these things well ahead of time, it will show up at the point of trying to list. So these factors are very important.
Thank you very much, Nathan.
Yeah.
Thank you very much, Nathan. Now let me come to Alhaji Jinjiri. Alhaji Jinjiri, the president of the Coalition of Northern States Chambers of Commerce. Alhaji Jinjiri, can you hear me? Yes, I can't see Alhaji Jinjiri.
Hello, Prof. It appears we have lost Alhaji. He was on the call earlier, but it appears he has dropped off.
Okay.
But we can intervene on the chamber. You can go to us all. No.
Okay. While we wait for him to rejoin us, let me come back to Alhaji Ali. Alhaji Ali, the agric sector is quite huge in the SME makeup of Nigeria. You have a lot of agri-businesses that make up the SME. If we are talking about over 40 million SMEs in Nigeria, we have so many of them, in the agric value chain. Okay, and the importance of the agric sector in our economy cannot be overemphasized. This is a sector that contributes about 30% to GDP. So I ask you, Alhaji Ali, how do you think the stock exchange or the capital market in general can assist the food subsector, can assist in boosting the food subsector of the agric sector? So in what ways can the SME play a major role in boosting that sector? So what are your expectations of the stock exchange?
Thank you very much, Prof. As you have earlier said, the agri value chain in Nigeria, let me go back to say that today in Nigeria, the focus is on agriculture. And the only way that you can move Nigerian agricultural sector forward is by enhancing the value chain of processing these agro products. Whatever comes from the field, we should be able to process it in terms of giving it good value. Then the issue of access to financing and other facilities that are required to move the sector forward. The Nigerian Stock Exchange has a lot to do, more especially when it comes to the issue of commodity exchange, even though it is a different exchange entirely, but definitely if Nigerian Stock Exchange could be able to partner or to liaise with the commodity exchange to bring about the issue of sourcing of our raw materials to a level that there is need for something like a stock receipt, which is similar to the instrument used in stock exchange, whereby a farmer can, after harvest, stock whatever he has, and I, as a processor, after harvest, can be able to access those products with ease and under control system, it will definitely help. Then the issue of ease of entering the market. If you look at the issue, is that like what the Corey was saying, preparation of the businesses before they access the market. Let us look at the issue of small and medium enterprises. It depends on the definition that you give. You might find out that one of the small business cannot afford to put in the required compliance, and and that will now be an impediment to getting into listed with Nigerian Stock Exchange and access the finance. So if the way that Mr. Olariwaju said that they have reduced the criteria to about 4, if they can look at the nature of the small and the micro and the medium businesses or industries in the agro-allied sector, if it can accommodate, let's say, issue of coming off with an idea of bringing in a cooperative of like 2, 3, 4, 5 small businesses in the chain and register them like cooperative, and for the extent to allow that cooperative to be able to access the market, that will definitely help.
Thank you very much, Alaji. I'm sure Larry, is paying attention. The idea of aggregating smallholder farmers into cooperatives and giving the cooperative access to listing. I think that point has been noted. But let me stay with you, Alhaji Ali. The government has, in this period of pandemic, the government has rolled out a number of palliatives. In Central Bank too has intervened with a number of funds, interventions going to SMEs. Now this question is for you, Ali, and I would also like Dr. Ahmed Rabiu to react to it. Have you benefited from any of these palliatives? Talking about your businesses, have you benefited from any of the palliatives by the Central Bank of Nigeria since the pandemic started? To
be specific, for my business, no, because all the way I look at all these things, the way they appear and the way they are being promoted, it is a little bit easier. But by the time you want to access such, it is then that you realize that everything that comes from CBN is palliative as per the manufacturing sector or the small medium businesses. You have to access it through the commercial banks, which the commercial banks have to give you a credit rating, which that is the major issue as an impediment to most of the businesses. So actually, that was why we did not even try to access any of the CBN intervention palliative against the COVID-19.
Okay, what about you, Dr. Ahmed? But I must say that I know that's quite a good number of small businesses to have been able to enjoy these facilities. So I would advise you to try. You won't say because the banks are used to put in roadblocks that you won't try. So I will advise you to try. Remember too that there's a particular intervention the central bank did through the NISA Microfinance Bank, not through the that one was also meant for not only households but also SMEs. It didn't go to through commercial banks. So Dr. Ahmed, what's your experience?
Thank you, Prof. We have actually been able to assist quite a number of stakeholders to access most of the facilities offered, particularly by the central bank. and the other also social intervention programs from the presidency through the Office of the Vice President. The scale perhaps is the issue, and the awareness also being given, because I remember for those we facilitated with NISA, it was actually a very tough nut to crack. There were so many challenges regarding how the things are collated and rendered, but they were accessed. And it's a special package program, intervention program. So our major concern is in the day-to-day issue going forward, next steps as it were. As I was said earlier, when the second-tier security market was introduced, there was an attempt by a number to exploit it, and there are a few listings on that. I think 2 companies. Then, of course, there is the capital trade point. I have worked with some colleagues here in Kano for almost 2 decades on establishing a capital trade point in Kano, so that the reaching, people can easily see XYZ company, including the Allah Foods, for instance, including my own company, the Allah Island Dryport. A person can come and see that we are a person through the capital trade point is investing in this company that he can see. Whatever is sophisticated, as in the stock exchange, where you are investing in a company that
Okay, thank you very much, Doctor. Thank you very much, Doctor. Now, thank you, Doctor.
Issues.
Thank you, Doctor.
The secondary market has been hindered in spite of so much, or there is this opportunity. The primary market that, and I just want to repeat this point.
Okay, thank you very much. Thank you very much, Doctor. You will all have a minute to round off, give your closing thoughts. I'll start with you, Nathan. Your closing thoughts on what we've been discussing, but remember to touch on the issue of valuation of SMEs. What can we really do to resuscitate the IPO market in Nigeria, especially as it affects SMEs, the initial public offering market for new issues, especially with respect to SMEs. Also touch on the issue of valuation of SMEs with respect to listing, in your closing thoughts. Nathan.
Okay, the dry up we've seen in the IPO market comes down to one thing, which is loss of investors' confidence. Prior to the 2008 financial crisis, we saw a lot of interest in the Nigeria stock market. But after that, we saw, if you look at the 14 years between 2007 and 2020, we saw a reduction of local participation in the stock market from 3.5 trillion naira to about 1.4 trillion. But again, in the same time frame, investment from foreign portfolio investors went up slightly from about 616 billion to almost 730 billion. So it comes down to loss of interest by local investors, because prior to the crisis, we had over 3 trillion coming from local investors. So what needs to happen is for us to win back the lost confidence. And the lost confidence comes down to having the right reporting structure, corporate governance, system automation. Majority of the young people today do not have time to wait for unnecessary bureaucracy, filling e-dividend forms and all of that. They want everything on the go. And I know the NSE has been doing a lot in this regard. We've seen their XPO, automated public offer system. A again, talking about valuation, valuation also comes down to interest, particularly for the SME. The SME does not have the kind of trading volume to command the sort of valuation that they deserve. So a lot of work still needs to go into the advocacy that is ongoing to get a lot more SMEs with high growth potentials to list on the good board. A lot of work needs to go in there so that we have more companies listed on the growth board. And fund managers can actually market the growth board as an investable index. During Larry's presentation, he later clarified that the growth board attracts more of tech companies, but also we want to see more companies from broad sectors, food and manufacturing, food and beverages, oil and gas, so that the growth board as an asset class can be sold to potential investors. In closing, one thing I would drop for SMEs that are looking to list on the exchange is to improve their knowledge of the financial system in Nigeria. Some of the things that you think might be a roadblock to you might actually be not doing the right thing at the right time. Talking about taxation, take advantage of the opportunities created by the stock exchange. The stock exchange has a training program for companies to participate into deepen your knowledge of the financial system, so you know how to take advantage of it for the betterment of your company. So I think it's very important that the companies seeking to list should be up to date, understand the tax laws properly, so that you can use it to your own advantage. Most of the businesses that comply to tax laws, regulatory requirements, do so because they understand what the law says. Poor understanding will lead to non-compliance, and non-compliance will make it more difficult for you to meet the requirements to list on the exchange and even continue to comply post-listing.
Thank you.
Thank you.
Thank you, Nathan. Thank you very much. And Dr. Ahmed, we have over 40 million SMEs in Nigeria, and we've been told here that only 9 of them are listed on the exchange. So what do you think, we should do to bring more companies to list on the exchange, especially small companies to list on, to take advantage of the opportunities the exchange offers?
Thank you, Prof. Importantly, there are operators that have capacity to to just run the machines, produce the thing. They have using their profit that is retained and continue. That is why I said the point of capacity building. And at this point, I will encourage that the Nigerian Stock Exchange should partner with the Federal Ministry of Finance, Office of the Central Bank, the Federal Ministry of Industry, Trade and Investment, the National Planning, I think it's the same Ministry of Finance and National Planning, and come in to have a robust engagement to go around and educate the operators, business captains of industry, to appreciate that there are funds there and we know that there are resources. You have asked in the segment that you indicated, how do we drive people, to, investors to the secondary market? It is by improving confidence is alive to its own responsibilities. The Securities and Exchange Commission is alive to its own responsibilities. Unlike the yesteryears, before we had the crash in 2008, what used to happen was that a company that was not in operation, that was not at all for business, used to come into the market blindly with money, and they want to low stock that is growing, the grower stock. They will just go and start buying those stocks, and because the prices of stock go up in accordance with the higher demand, price elasticity of price, movement on demand and supply. The price is the same with the SEC. The moment a company stops operation, the company's shares are supposed to be stopped from growing. the market should know that this company is no longer in operation. I'm happy that is happening. The second is there is the Financial Reporting Council, which insists now on all companies operating to render their returns appropriately. So they monitor what the exchange does and what the Securities and Exchange also does, and the stock exchange, and therefore they are able to ensure that there is, you said, I think the regulators have introduced adequate measures to prevent the recurrence of the market crash? Yes, this reporting processes that are checks and balances are providing the safety valve, the safety guard, that a company will now not be making good profit, no trend returns, and then is entrenched and prevent participation in the capital market by the promoters of businesses, largely remain that issue of capacity. For those, and then because the major issue is, if you look at the rules and you find that they are too stringent, it is because they are stringent to you. Because let me give this example: if a person is just holding a first degree and he's not a professor, the moment you give him a problem, he starts having headache and unable to find his way. The moment you speak to the professor has got a very wide vision and capacity. Most of our businesses don't know, like has been mentioned by Nathan, a person will be the managing director, he'll be the chief executive, he'll be the finance man, he'll be the operations man, and therefore at the end of it, he has one pocket. The same pocket he buys his groceries for the house, the same pocket he buys his clothing, the same pocket he buys a new car, in the same pocket he does his business. And he doesn't get to understand that he has gone into a very deep fit that he cannot.
Thank you very much, Doctor. Thank you very much, Doctor. Thank you very much, Doctor. Let's get the closing thoughts. Thank you, Dr. Ahmed. Thank you.
So, Prof,
thank you for this.
Sum it up and repeat it at the end.
Thank you, Doctor, for those insights. Let's get the closing thoughts of Alhaji Ali. Alhaji Ali, your closing thoughts. Of course, what the agri-tech and agripreneurs, should be doing to grow the food sector, especially through the the stock exchange. Your closing thoughts on all that you have heard, especially the comments made by Dr. Ahmed Rabiu.
Thank you very much, Prof. As I have earlier said, that the way and manner that businesses under SME, mostly in the agro-allied sector, could be able to participate and to access capital through the stock exchange, that if, like I said earlier, the stock exchange could be able to still bring down the benchmarks of entry parameters of the market, it will definitely help, more especially by bringing in small scale businesses, either farmers, either processors, into cooperative, and by giving the cooperative access to tap the capital from the stock exchange. That will really go long in bringing up a lot of participation of SMEs into the Nigerian stock exchange market.
Thank you very much, Alhaji Ali. Thank you, Dr. Ahmed Rabiu. Thank you, Nathan Mokoro. And a special thanks to you, Professor Waleke, for moderating this session. The session has been very insightful. I've gained a lot, and I hope our participants have gained a lot as well. We've run out of time, and so without further ado, I'll pass on the session to Adedumola Banu to bring this session to a close. Thank you very much once again for your time and attention.
Thank you, Olutobi. After about an hour or and a half of insightful presentation and discussion, it is my pleasure to say that we've come to the end of this webinar. I would like to thank the National President of NASIMA, Ajay Saratu Iya Halil, and the President of Coalition of Northern State Chambers of Commerce, Industry, Mines and Agriculture, CONSIMA, Alhaji Jinjiri Abubakar, for support and collaboration towards ensuring the success of this event. We have been able to bring together government, investors, business promoters, academia, and chambers of commerce to deliberate on the challenges facing the SMEs, and most importantly, to discuss the initiative and opportunities available through the Nigerian Stock Exchange. I would like to commend our panelists for their robust and intuitive discussion. The challenges that face SMEs are enormous, and it has been established that access to finance comes foremost. The available opportunities through the Nigerian Stock Exchange has been expressly put out today. We have seen that the growth board of the NSE was put together to elevate the Nigerian capital market and meet the needs of businesses at every phase of their life cycle. Please be assured that all recommendations will be reviewed by the exchange and, where applicable, implemented to further facilitate the growth of the SMEs. Finally, I wish to thank the National Council and the executive management of the Nigerian Stock Exchange for its prioritization of this segment of companies and for this great platform. Thank you everyone for joining us, and please keep safe. Thank you.
Thank you.